welcome back to my YouTube channel. At this time, we are going to study about insurance plus risk management. Of course, insurance and risk management is very wide topic and it's very vast. So we need to be very selective in choosing the subject. When we say about personal finance, we mean that retirement planning and income and expenditure account, real estate planning. So we have to say when we talk about insurance, also sometimes we need to talk about that those aspects field. I mean, let's start over here. What actually is what does insurance implies? Insurance is pooling of fortuitous losses by transfer of such risks to insurers who agree to indemnify insured for such losses. So to make it clear about this, fortuitous losses means uncertainty which can happen anytime in future or at present time. Sorry. The main theme of insurance protection is that to protect against any unexpected, unfortunate calamities or unfortunate events, to protect you against that. To protect you against maybe inflation, calamity, fire, theft, etc. There are many types of insurance like life insurance, vehicle insurance, health insurance, endowment plans and all. This is the catch of insurance categories of insurance. Pure, the first one is pure versus speculative risk. The first one is pure. Let me write pure here. Pure versus speculative risk. I'm really sorry. At this time, I won't be able to use my graphic tab to write over here, to write in the white blackboard. So I cannot write perfectly. You have to understand me about that, okay? In case of pure risks, there are two main occurrences there. The first one is loss. The first one is loss occurrence, and the second one is no loss. No loss. In case of pure risks, there can be two occurrences. The first one is loss. You may be lost and may not lose. But in case of speculative risks, here also the same thing implies, like there are two occurrences. Maybe profit is there. Profit is there. On the other hand, loss is there. Profit and loss is there. The chances of profit is immature. Well, in case of periodics, there's no chances of profit. So speculative can get insurance. No. Speculative can never get insurance, but periodics can get insurance since there are no chances of profit. I hope that you are clear about that. Let's let's drop over here. Then we'll move on to the second one. Fundamental versus particular. Fundamental versus particular. What does fundamental implies? In case of fundamental, it's a national consequence, or it depends on a large population, not individual cases. It depends on a large population like hurricane, flood, calamity, earthquake. So it's very large concept. In case of particular, it depends on individual, like fire, maybe due to the fire calamity or theft calamity. So particular one can get insurance, and fundamental would never get such an opportunity. Okay. I hope so. From the next time, I'll be using my graphic tablet so I can sketch up more nicely rather than this time. The third one is financial versus non-financial. Okay, financial. Let's take a look over here. Financial. There are two persons. The first one is Mr. A, and the second one is Mr. B. Okay, Mr. A working and earn money regularly, maybe let's say every month he earn 5k. Okay, 5k. B is not educated and he don't have any regular source of income, so we cannot say that he is earning potential. So let's put blank. In this case, insurance and earnings completely linked. So in this case, Mr. B cannot get insurance and Mr. A can get insurance because he is earning some funds regularly, or if Mr. B is suppose a self-employed person engaged in some work, he used to earn some cash from his self-employment. When he started earning some cash, then he can apply for insurance. Earning means earning equal to insurance. Okay, in a few, in a very simple word, when you earn, you can apply for insurance. And the second one is non-financial. Non-financial, non-financial like love, affection, love and affection. Just for an example, I'm taking out these two. Just for an example, and just for to make a meaningful love and affection, we cannot measure, or we can measure how much in terms of financially. We cannot measure it. We cannot measure it, love and affection financially. That's why non-financial cannot apply for insurance. Okay. You see, actually, this time I'm very selective in choosing the subject out the topic. As I already mentioned that it's a very wide topic, especially this insurance and risk management. There are lots of topics like inculcation and analysis and formulative. There are lots of items and subject included here. But for those beginners and non-commerce background, to make it more meaningful and to be able to easily understand, easily catch up. So I'm presenting here in a few simple words and simple tasks I enclose you. The fourth one is dynamic versus static. Dynamic and fundamental is quite similar in the sense of population base. Dynamic, okay. Dynamic and static. Dynamic and static. In case of dynamic, the consequence is very large. Maybe you can say that national consequence like inflation, calamities. So it's very large. Well, in this case, static case, it's very particular. Let's say it's individual. It the consequence is individual. On the other hand, in case of dynamic, the consequence is very large and on the national level, like inflation. Inflation is that when the purchasing power decrease. So in this case, static one can go for insurance and dynamic one cannot go for insurance since it's is very large and multitude. Okay, uncertainty. We must remember that uncertainty or uncertain events is closely linked with insurance. Here also I'm going to take out a few examples so that you may catch up easily. What we'll choose? Let's say Mr. X. Here Mr. X is there, and here Mr. Y present here, and Mr. G present here. There are three persons here. Regarding their income status, okay, here regarding their income status, income may be earning also, you can say that. Suppose their earning potential and the source of their earnings is same for three of them. They earn every month 5K, all of them 5K. I'm saying that just for an example so that you may grasp the subject successfully. Okay, they earn every month 5K, three of them, Mr. X, Mr. Y, and Mr. G. Now, regarding their health condition, okay, health. Mr. X is very healthy and he's not infected with any critical disease. Let's say his health status is fair, okay, fair. And Mr. Y, in case of Mr. Y, let's say he got infected with tuber tuberculosis 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 TB, in short form TB. Mr. Y is more critical than Mr. X, but such not a dreadful disease. TB is treatable, controllable. Mr. G, the last one. Mr. G is infected with very serious and critical disease. Let's say fourth, fourth stage, fourth stage cancer. Okay, he is infected with fourth stage cancer. Fourth stage cancer. Who can apply for insurance and who cannot apply for insurance? You must remember that insurance is linked with uncertainty or uncertain events. That let's say that their age group is 25. Their age group is 25. Mr. X is now 25 years old and Mr. Y is now 25 years old and Mr. G is now 25 years old. After 10 years, let's say after 10 years, they all will become 35 years. Okay. Mr. X, regarding Mr. X, whether he infected with any critical disease or whether he is fair enough now, he's going to die one day. And Mr. Y also is going to die one day. Whatever may be the disease, no matter that, he's going to die one day. And Mr. G is infected with cancer, he's going to die one day. After 10 years, Mr. X is very healthy in this situation right now. At this situation, he is very healthy and his health condition is very fair. So his chance of survival after 10 years is quite certain. And Mr. Y also, he got infected with TB, tuberculosis, but TB is very normal disease nowadays since it's become controllable and treatable, and many of them uh, these days they get healed over this disease. And this cancer, for stage cancer, is no chance to survive for 10 years according to medical treatment, according to medical language, okay, medical expectation. That's why in this case Mr. G cannot apply for insurance. Why? The reason is that now he is suffering from fourth stage cancer, and after 10 years his chance of survival is very less. That's why he cannot apply for insurance. Mr. Y can apply insurance with a higher premium. Okay, higher premium. And Mr. X can apply for insurance with standard premium. Standard premium. They all will die one day, but regarding their health status, Mr. X is fair, Mr. Y is okay, it's treatable according to medical synopsis. And Mr. G, chance is very less for stage cancer. It's a dreadful disease. It's a scary disease. So he cannot apply for insurance. Mr. Y can apply for insurance with higher premium, and Mr. X can apply for insurance with standard premium. If I make my video a bit longer, yeah, maybe boring for some of you. That's why I made it short and made it very clear and short it. So I hope at this time to you learned and you got some idea about this insurance and risks management with the tutorial the categories of that peer and fundamental, speculative, and financial and non-financial, and who can apply for insurance and who cannot apply for insurance. Insurance is linked with uncertain events, uncertainty, and what is the main theme or the main aim of insurance? Insurance company is not going to give you a profit or to make you wealthy, but to compensate you and to protect you from uncertain event and to protect you against losses like individual case, fire, theft, and a large a large consequence like inflation and natural calamities like that. So to protect you against such losses, but not to make you wealthy, wealthy and to make you profit from this. Okay, okay, that's all for today. I'll try my level best to make at least one video per week, so you can learn some subjects which you never knew, and maybe some you have gone through but not familiar with that. And in the comment section, or actually, I'm really welcoming you to share feedbacks regarding which subject you want to study through this. And you can raise any questions, any topics. Don't hesitate in doing this. Okay. Thank you so much for this time. Bye bye.